Hi everyone, Brian from Bear Bull Traders here. It is the weekend, July 16th, and I hope everyone's having a good weekend. This, of course, is a weekend video. We'll go over what happened last week, and then we'll look ahead to coming week. We've started out into earnings season, so should be lots of price action and volatility this week. So let's get down to it. So let's start out by taking a look at what happened last week of July the 10th. Wednesday and Thursday, we did have the CPI and PPI data. Came out, showed that inflation was continuing to cool. Investors and traders, of course, loved that news, and we got a nice rally going. But Friday we started out strong, and then that consumer confidence number came out around 10 o'clock, and it was way higher than expected, and that really put a damper on everybody's optimism, with consumer confidence still boisterous, and so we kind of sold off going into the weekend. But all in all, we had a pretty darn good week here. We had the Dow up over 2%. The Qs performed the best, 3.5%. Or not the best, actually. IWM was even better on the week. So anyway, strong week overall in the markets. Basic materials, communication services, those were the strongest gainers for the week. We didn't actually have any losing sectors on the week. Healthcare and energy did come in on the weakest side of things. Energy really sold off on Friday. Surprising. And treasuries, they ended up going down a little bit, down to 4.77 from 4.95 on the 2-year, and the 10-year again dropped below that 4% level, and that's where you can see where we finished last week. U.S. dollar again really weak, and it's really starting to drop, and we'll take a look at that in a minute. And Bitcoin again not making much headway one way or the other. Still 30,000, just over 30,000. So that was your week in review. All right, before we get going here, I always like to do a quick plug for my book on Amazon, Profiting as an Active Trader, the rules, strategies, and the routines of an active stock and option trader. So you can check that out there, available on Amazon. So let's get down and start looking at some charts. And as always, I like to start out with the Treasuries. You can see here we've essentially put in almost like a triple top here. We tried to get through 5 before. We actually did manage to get through 5 back in March, and almost got through 5 here July 3rd, and now we're pulling back again here. So again, seems like we're kind of topping out on this 2-year Treasury yield, and again the 10-year, same sort of story here. We've pulled back again after popping our head above 4% like we did here, and maybe we're just stuck in a range. We definitely have we had a lower high here, or a lower low here, and now pulled up again and then resisted again. So maybe the treasuries are just stuck in this range, which wouldn't be bad for stocks. Because the higher the treasuries go, the more interest in moving money into those for guaranteed return. And the markets are quite extended. You can see here, transports, we had a pretty much a good day on Wednesday, but really pulled back, and now we're sort of rolling over here a little bit on the transports. And again, on the week, we're kind of right up into an area where there was prior resistance, and again pulling back, but the trend is still up on the transports. Transports being a sort of a proxy on how the rest of the economy is doing. So you can see here, here's the Dow, again kind of breaking out here, even though we did have a pretty significant pullback on Friday, as I mentioned, with those numbers that came out, with consumer confidence numbers that came out. And you can see on a week here, we're right at this prior level of resistance, really trying to get through it here. And again, I think it's going to depend on a lot of what earnings come out, and what the guidance is going to be going forward. We already heard some guidance from the banks. Some of the banks have reported Friday increasing loan loss provisions. So that's sort of a sign that weakening consumer, at least on one end of the consumers, or at least a certain segment of the consumers. Accuse, again, we had this nice pop up. It looked like it was going to be another breakout day, but pulled back pretty significantly on Friday after that consumer confidence level came out. But on the week, we are still in an uptrend. And again, this continuation is going to depend on how earnings look going forward. Earnings are expected to drop this year over year about 7%, S&P 500. It's what the analysts are expecting, so we'll see how the market reacts to that if that does actually play out the way they expect. Here's another, the SPY, again, we broke out from this 445 level, resistance back here and here, we broke out, and again, certainly uptrend still established on this this breakout here, and you can see there on the weekly still a well-established uptrend, and really not far from this end of year high at 470-ish area. So volume pretty good on the week. IWM, again, we had a little breakout of this range here, came back up. Friday, we really sold off. My theory was that a lot of the big banks were stealing deposits from some of these regionals, and I think that's the way the market read it. So the IWM, which has got a lot of regional banks in it, took the biggest hit. So on the week, though, we did break out of this this little sort of area of resistance, which was resistance here and then support here. So we did break out again. Now this 195 level is sort of become a target for next area of resistance. The VIX, again, really no fear in the market. That's all you can say. The dollar had just got slammed last week. These are Monday, Tuesday, Wednesday, and then a huge gap down Thursday after that CPI number came out. Lower interest rates on the horizon, possibly, or at least no more raises. And the dollar really took a hit, and again took another one on Friday, or at least this was Friday, sort of an inside day. Thursday was the second hit after the PPI number came out. So dollar really backed down into an area of prior support here, so I would expect a bit of a bounce. But you know, the big beneficiary of this sell-off was energy, anything commodity related, emerging markets, anything that is helped with a lower U.S. dollar benefited from this week. And you can see here on the weekly, we're right back down into an area of prior support here, so I expect some support. And Bitcoin, big pop up this week, but big pullback, and the news flow coming out. There was a news, or at least a judgment that came out against the SEC with Ripple. It popped it up and then dropped it back, and you can see here again, just really no headway over the last 3 weeks on Bitcoin. So let's take a look at a few stocks we're watching this week. Again, this is an earnings. We're coming up on earnings, so you have to be careful. We're not taking any positions through earnings, because I do not like to hold swing trade positions through earnings. If you've read my book, it's one of the things I don't like. It feels like gambling, and I don't like to gamble with my money, but it does give us some opportunities to trade options after the earnings are released. So Apple again is just sort of stuck at this, you know, having trouble getting through 195. Certainly lots of support here at 185. So I would say this is an opportunity to buy and sell some calls or puts, just based on the fact that it's probably just going to churn. Airbnb, a lot of these travel stocks are, you know, the where people are spending money is in the travel sector. You can see here this was all support along here. We did finally break down, then it became resistance. Support becomes resistance, and we had resistance here, and now we are breaking out, and I think that this next level, if we can continue higher, we could be going up to this 170 area on Airbnb. As you can see here, the RSI is going up. We had good volume on Friday, and this is a weekly chart though, but we had some good volume on the week. So Airbnb looking good for a continuation move there. And I'll be looking at that on Monday. Amazon's kind of stuck here. It did try to break out. You can see Friday we did pull back after it did try to break out here, but Amazon still in this nice uptrend, breaking out here on Thursday and continuing Friday. So watching that one as a possible breakout, but certainly selling puts underneath would be a good way to just take in some premium because it does look like it keeps catching a bid here. Google, again, Google on the weekly, you can see here we're on the verge of breaking out again. 130 was resistance back here. 130, 129.55. Again, get above 130. Next level could be in the 140s. Again, an opportunity to sell puts down here because that seems to be where this 115 area, where his support is. Just not sure how to look next week to see what kind of premium we get. Live Nation, I'm really liking Live Nation. It looks like it's breaking out. People are going to concerts again. Seems like there's a lot of interest and everybody's, after the pandemic, everyone wants to go see live shows and Live Nation is really looking pretty strong here and it looks like it's breaking out as well. So possibility to, I'm not sure what the options are like. You want to stick with trading options that are liquid, that are fairly actively traded. Stocks like Tesla, AMD, Nvidia. Live Nation probably not quite as much, so it might be more of a stock position, but it looks like it's going to head to 100 here, Live Nation. Nvidia, again, this huge move up on Friday and pullback. It responded to this news about the XRP Ripple, people thinking that more Bitcoin mining, so Nvidia was going to be the beneficiary of that, and so we did pop up here on Friday, 480. But again, lots of support on this stock. Continue to be able to sell puts if nothing else, and just collect premium because there just seems to be people here just willing to buy in when this drops. So Nvidia is still strong. Rivian, I'm still long some. I sold some 22 puts last week. They expired worthless. And I may do that again this week, depending on how much premium I can get for them. Again, if I go back to Ripple, if I do own it end up owning it at 22, if I got over a buck for them last week, I figured if I owned it at 21, sort of 21, that wasn't very far from the 200-day moving average. I'd be happy to be an owner there. So again, I think Rivian's sort of the cheap Tesla right now. I think it's probably going to go higher. But Tesla is reporting this week on Wednesday, so just be careful. That may affect the Ripple as well. SDGR, this is an AI play in the biotech space, and I've been in this one several times in and out. Really popped up this week, pulled back, filling this gap here, so possible. If it can get it even down to 51, it would be a really good entry because that would be an area of prior resistance that they broke through. But I'm not sure if it's going to get there. Certainly a level around 53 might be a place to nibble on that. Tesla, still strong. And again, reporting this week, so just be careful. I'd be reluctant to take a position on this prior to that Wednesday report. So I'm doing an ETF of the week. Every week I'm sort of featuring one ETF. And last week it was XLE. So you can see here we had a really nice run on it. This was Monday, Tuesday, so I took advantage of that with some Canadian ETF, sold some of it, and then it really started to sell off, and it really took a hit on Friday. And so got out of the rest of it. But that was interesting trade last week. This week I'm looking at XLF. Now we got more bank earnings coming up this week, but you can see here this gapped up on Friday on some of the bank news, and then they just sold the banks off like crazy. And you can see here this is what they call an engulfing candle. So you can see how the candle engulfs the previous one. So this is a reversing candle, or at least a reversing pattern. So I'm expecting more weakness in XLF, but we do have more a lot more banks coming up this week reporting, so just be aware that companies like Goldman Sachs and Bank of America, as well as a number of other ones, will be reporting this week, which could impact this XLF ETF as well. So that's about it, everybody. All right, let's wrap things up here. July 17th. Let's take a look ahead. Here's your levels on the Dow, Q, SPY, and IWM, and various levels of support and resistance. Monday, we've got a smattering of economic news coming out throughout the week. Monday, Empire State Manufacturing. We've got retail sales and industrial production. Retail sales should be interesting. See how strong that is with the high consumer confidence. Wednesday, we've got the housing starts. And Thursday, as always, jobless claims, home sales, and consumer sentiment again on Friday. As far as earnings go, we're starting out into earnings season. Obviously, kick things off with the banks on Friday, and you can see here we continue on with more banks on Tuesday and Wednesday. We've got Netflix and Tesla notable on Wednesday after the close, and Las Vegas Sands. Thursday, J&J. We've got CSX Rail. And yeah, so and of course, American Express and Schlumberger. A lot of interesting companies are going to be reporting this week, and probably lots of volatility as we go into the week here, and watching for these earnings. So that's it, everybody. Hope you have a great rest of the weekend, and we will see you. We start out the pre-market show 8 o'clock, and then 8:30 looking at all the various movers and shakers in the morning in the Bear Bull trading room, and then of course trading the market open at 9:30 with our members. So hopefully we will see you there. Have a good rest of the weekend. Bye for now.